Well, I want to start off by saying thank you so much for allowing me to come and present to you guys. It really is an honor for me. I'm a kid of a veteran, military family myself, so it is an honor to be able to present to you guys and be able to just share with you in regards of what you can do as investors, being veterans. Now, earlier I heard a wonderful conversation that was just being dialogued in regards to gentrification and what happens and things of that nature. Well, for me, I believe that gentrification is combated with education. You can only be hustled out of something if you don't know the game, right? So gentrification is a hustle. So a little bit about me and why I'm doing this and how I got started in this business at all. I'm originally from Oakland. I started as a loan processor, and I was taught by sisters during the time when real estate was really rampant, and loans were really happening. It was generally all women that was doing processing, and I wanted to know the business. So there was a sister who worked for a broker in Oakland by the name of Michael Smith. He was a really big broker, Michael Smith and Associates. I worked for this broker, and the woman there that was a broker associate with him taught me how to process loans. I'm really good with numbers, so being there after the first month, I had redesigned the whole system for how they processed the loans. So we went from a small value to where we had a really huge value. Now, when I got there, all other processors were quitting because there were enough files for them to do business that could fill up this room probably this high and just go all around the room. That's how many files for people and their programs, because they were just giving away money. So people were coming in droves to get this money. I got involved in this business, and it was very exciting because it was something new. It was something I was doing that was really positive, and I was learning. I went from there. I worked for them for 6 months, and I ended up account executive at World Savings. Reason being because I knew everybody's lending programs. I memorized every lender's programs and guidelines in regards to everybody. So it don't matter who you walked up. When you walked up, I knew exactly what lender can fund your loan based upon your criteria, your debt to income ratio, your FICO scores, so on and so forth. So from going from there, I ended up being an underwriter at World Savings. That put me behind the veil, and I could see a whole lot of things that I didn't see on the front end of lending. And that is how redlining worked, how you were blocked, and how African Americans were being disproportionized in regards to the areas that they lived in. At the time, I really didn't know how I could combat that, other than not care about it, have a little frustration, but still happy that I was still making money, right? I wasn't care. I was getting money, so I was like, man, that's bad, but I'm still closing deals. I went on from there to keep climbing, and I ended up at Bear Stearns. Bear Stearns is responsible for the crash of this epidemic, primarily. They're like the front runners of the system to wreck it. When I got to Bear Stearns, I started writing lending programs for thousands of major banks that they would use and sell off these programs. It wasn't until one day I got called into a meeting, and the meeting was about derivatives. And I didn't know what a derivative was. Does anybody here know what derivatives are? Raise your hand. Okay. So, quick term of what a derivative is. Anybody here raise your hand? You play dice. You know how to play dice. You played dice before. I know craps and all of that. Okay. So, if you are rolling dice and you're the one rolling the dice and you have a set point, say that point is 6. All right? Well, you're betting that you're going to make that point. Now, if you turn around and bet that you're going to crap out, and that crap out is going to pay 10-1, you're betting on you're crapping out as well. That's what the derivative is. The derivative is the side bet that you're going to foreclose on your property, that this note is not going to hold. In real estate, you don't own nothing. You think you do. If you own land, then you own some real estate. If you own the mineral rights, then you own the real estate. It's not so much about owning as it is about controlling. When you own a thing, majority of the times, somebody can come and take it from you. But if you're in control of it, that's a whole different process. See, when we have other entities like LLCs, S corps, trusts, these are considered entities. These entities can't be seized. They can be broken down or broken up. But trusts can't be broken down and broken up. And trusts cannot be seized. Majority of veterans are living without sustainability of structure for their finances. How many in here owns houses right now currently? How many in here is renting? Everybody else. How many in here has certificates to purchase as veterans? How many veterans in here? All of you have certificates. Even if you own a house right now, you still have a certificate. It's how you leverage the certificate.
Correct.
So, leveraging the certificate denotes a multitude of things that you have to do in order to make that happen, but it's not unrealistic. Your certificates will go from, and I'm getting away from this, but your certificates will go from commercial and or residential. Now, for me, changing my whole process of why I left the mortgage industry, I went to Bear Stearns. Once I got to Bear Stearns, I kind of got really disgusted because the people that was in the room was not me. They were not from my class and background. And the plights that they dealt with weren't the same plights that I was dealing with. So morally, I got drained by it. I went from there, I went to school to Japan, and then I came back. When I came back, I had a lot of information about the lending, but everything had changed, but there were still structural things that still stayed in place. If you still knew a little bit about loans, you know, okay, well, you still can do things. You just have to be, you have to have way more money, and your credit has to be A1.
So no more C paper.
No more C paper. C paper was basically subprime. Okay. So subprime is what they say is the reason for the fall. The reason for the fall was the A paper and those that created the programs for subprime lending. Okay. So always, the villain will always blame the victim. So in the system that we were dealing with at that time, that's exactly how this is presented to us. We become victimized, marginalized, somebody else comes in. We don't have a defense mechanism against that onslaught. So, not having a defense mechanism, it kind of sets yourself up for what you're the victim. Oh, this is happening. Like the four women that, the mothers, the four mothers that are occupying the house right now in Oakland. You guys familiar with that story?
Yes.
You guys familiar with the story that the judge just said that they can't stay there and they're not going to be, so they'll be escorted out here by the sheriffs. Now, I'm all for everybody having homes. I am not for you seizing a property that is controlled by someone else, but they're just not there. Just imagine if you go home and somebody is squatting your house saying, I live here now. Now, there's ways that you can go about doing this, because this has happened already in Chicago with the anti-eviction campaign. And I was a part of that campaign 3 years ago, and I went there in Cook County, turned over to myself and our company 2,168 properties that were considered blight. When something is blighted, that means that the city is going to come and take it. It's being prepared for gentrification. So in Cook County, you would have graystones, and they would just say, okay, these are blighted, meaning they're going to demo them out. So there, the mothers, some brothers, and others were actually occupying these properties and taking them over. A lot of this happened already in West Oakland, gentrification, we call it that. But they went right in, seeing that these houses were abandoned, and they had seized them. And the tax assessors for the city, no problem. Here you go. We don't want the debt. You're taking on the problem. Great. Often at times, if you look like them, then you'll have accessibility to pull these things off. All right? This is just how the game works, right? So we have to understand that part. Understanding that, that means that it's your responsibility and my responsibility to act accordingly, right? Spook that's set by the door was a prime example of acting according to what you're faced with. So if you know this, then the responsibility is playing the game accordingly so you can get out of it what your intent is. What is your end game? Are you looking to keep from being homeless? Are you looking for I want to be an investor? What is the position that you're holding into I want to buy some property? If you want to buy a piece of property and just, hey, I want to get a nice house so I can have some place to stay. All right, great, you can do that. But why do that when the biggest thing that you have in your hand as a veteran is not the benefits that they play you out of, but the certificate that they play you out of? Because you're an investor. You can't look at this like, oh, I'm a homeowner. You got to look at this like you're an investor. It's a mass amount of wealth that you can retain off of one certificate. And if you don't know how to use it, they're not going to tell you. It's not their role to tell you. Their role is to keep you from losing it or using it. And most of us, one second, I'll answer that question in a moment. Most of us, we don't use it, we take it to the grave. Majority of people who are not using these certificates are African American veterans. The most that are needed in support in housing are African American women veterans with children. So if we understand that dynamic, well, how does that benefit us? Well, as a people, African American women are higher in FICO standings, they're higher in gross income, and they are higher in positions of stability and investing. So that means that how does that work for us as a whole? Well, if these 4 people on this side get together, they can formulate a company that can purchase homes in bulk. They can use one leveraged certificate to buy up this 8 complex over here. You understand what I'm saying? Mm-hmm. That means that the partnership of these 4 people. So when you get with the people, you say, okay, you got other investors. How do we do this? I've already talked to Baba Day Don in regards to this. I know I'm kind of going off of this, but purchasing properties with money using your veteran's certificate for commercial and residential is all leveraging. You're already certified to do the purchase. Where I come in assistance of that, I'm already certified with over 50 banks and a lender that is funding veterans. I have veterans that are going through foreclosure, losing their house. I contact this lender, they in the new house before the foreclosure drops. Now these have been Anglo-Saxons, European investors that are pulling this off, but the system is still the same. It's just us not going to the back to go after these things. Mm-hmm. So what I want to do is present steps, knowing where you guys want to, what it is that you're trying to get achieved. What is your end goal? Do you want to say, hey, I'm looking to invest in some property so, I could leave something, when I'm not here for my generations behind me? That's great. Because you should use these certificates to wealth build. I'm not talking about getting rich. I'm talking about having wealth. And even if it's not you having it, but your generations behind you can obtain it and sustain it if you give them the right information and you teach them right. And that all starts with you guys knowing, what is it in my hands? What do I have as a veteran? Because the majority of what you have, you spend a decade fighting with your own administration just to get it. If it's your medical and your housing, the 2 things that a veteran shouldn't worry about after fighting for this country is veterans and housing. That's just the height of stupidity. However, it is what it is. So for us, how do we formulate how to go from not being a resident to owning? You have to determine your goal. How you get towards those goals that you're destined to, you have to be clear with what yourself is. Who in here wants to buy a house right now? 2 people? Okay, that's cool.
I'm kind of in the middle on that one.
Right.
So I actually want to do what you're suggesting is buy land.
That's very, very good. We were speaking of Baba Shabaka earlier, who's a veteran. That's what he's doing right now, procuring over 100 acres and looking to develop those out. And he has an agricultural system of what he's going to do in developing. His development of agriculture is going to be bamboo, which is very profitable, overwhelmingly wonderfully profitable. And then negotiating with a company to facilitate assisting in that. And then it just comes down to numbers of what it will cost, right? How much money do I have to put up front to make this happen? For you guys having such a strong financial pool, it all just comes down to what you jointly agree to if you guys want to go after something in bulk and profit from it. I'm going to go back to the 4 investors that have established company, per se, right? Well, the strongest one amongst them on paper is the front, just like in battle. Whoever is the strongest is going to run point. It's no big eyes and little U's in it because it's only paper. It's only a straw person. So when you build your entity, they're going to use the strongest person out of your group as the face that they trust most. Doesn't matter for you. All you want to do is obtain the goal of getting the loan. The money is what you are focused on. Where the properties come in at, and I was listening to earlier gentlemen speaking about how hard it is to get properties in Oakland. No, it ain't. It's where you're shopping at. If you go on to Zillow and you're looking on Zillow, if you go on rent.com and you look at house.com or any of these other, or you go into an agent, here's the issue. They're giving you property at market value. You don't need to buy property at market value. You need to buy property that is under market value, meaning that the property needs work. That's an investment. Fixer-uppers. Not even so much fixer-uppers, but it's upside downers is what I like to call them. That means when the property owner is upside down in the mortgage. How does that work for you? Then the bank has to sell that property from 60 to 55 to maybe 50 cents on the dollar of what that property would be worth if it was on market. So that means you instantly buy property with interest in it, with equity in it. If you can get hottest area right now to purchase property out here, Sacramento, bar none. Because majority of properties over there are foreclosing, they're just going back to auction. Nobody is presenting themselves to the homeowners generally and buying the property just straight from them. And that's very important. Homeowner does not want to go into foreclosure completely because they're wrecked financially for, let's just say, a good 2 decades. Good 20 years financially if they take your property. Now, if they force you into short selling the property because you owe so much and the property's not value isn't as high as what was owed by the owner, then the bank is going to take a settlement and cut, and the homeowner still can go right back and purchase another property 16 to 18 months, depending upon how they resolve other assets of their credit. But if the programs that they follow through us, we have recovery. Our recovery rate, if they follow the steps, is pretty much 100% if you're following along with the repairing your credit, the repairing how you deal with your bills, and you structure yourself and know how your numbers work. A lot of us don't know how our numbers work. We just get bills that we got. We get our check and we pay the bills out. But we have no structural concept of how to build the leverage of ourselves as individuals or as entities. These are simple concepts that if we go over them repetitiously enough, then they become second nature. You'll look at everything That glass, that bottle of water is an investment. The cup, the styrofoam cup, everything will become an investment in your eyes. And then you'll know how much money do I have to put into a thing in order to get the maximum return of my investment. What makes us really good is what with the team that we have, is that we primarily, our network of investors and lending resources provide funding for our projects. So we don't run into a lot of hiccups when it comes to financing deals. And that's because of our system and the number aspects. So I'm just going to go over some things that you may or you may not know. Okay. There are over 4.5 million homeless veterans that come back home to subpar living and unable to financially provide for their family. Veterans National Homeowners Association program is a $460 million program. The program partners with HUD to provide over 78,000 housing vouchers in VA to provide additional supportive services. There are more opportunities for you in civilian life than in service, especially with the trades you learn from being in service. Your certificate allows you to purchase residential or commercial properties. Some states even provide the land and development money to put you back into a house or build one. But not all states are going to honor this. Once a veteran is housed, that unlocks over 75,000 additional services for every veteran, such as mental health, to keep our veterans off the streets. 23% of the current national average of vets needed housing are children. The bottom line, the military trains us to go to war, but no one trains us to come home for housing and for basic necessities. Those things are provided for us. I did that already. Did you know? Sorry, guys. All right. I want to go over just retirement materials. So, like retirement materials, you have IRAs and you have Roths. I heard you speaking earlier. I'm sure that the company that you with, or already have like a Roth probably or IRA set up for you that they market pretty much to you, right? And you guys pretty much you set that up for yourself. Have you set that already up for yourself?
Yes.
Awesome. In doing so, there's so much leverage that can provide for you, but that investment that you have into that IRA, you'll make 1,000 times more money investing in real estate. 1,000 times. If you took that money that you were giving them for that IRA, for that Roth, and you put that in you opened up a trust, or you opened up a direct escrow, and you put that money and you diverted that money over there. When you divert that money over there, time builds trust with lending. And there's two forms of lending that you want to pay attention to, which is commercial lending, and then you want to pay attention to hard money lending. Hard money lending is not hard. It's easier for you to get. The difference is if the interest rate on hard money lending or residential lending right now, current rates are anywhere from 3.5% to 4.2%. All right. So hard money lending is going to come to you and say, okay, I'm going to give you this loan, but I'm going to give you this loan at 8%. I'm going to give you this loan, but I'm going to give you this loan at, 10%. Well, guess what? You just said, wow, right? But trip off this. When the market crashed, if you crashed with the market or had a house in the market, you had a first and a second. That means you had a 6%, and then you have a 12% back in. That's 18%. Yeah. Right now, rates are lowest than it's ever been since the Depression. Since the Depression. So to me, what that means, buy up everything. Because as soon as this next administration changes, they're going to raise the rates. Trump keeps the rates down because he's an investor. It benefits him to have those rates that low. So for you, I don't get caught up in the selectorial process, because I don't feel like neither one of them ever have an agenda for black people. so I'm not really supportive. I'm gender support. I'm a agenda supported civilian, meaning that I ride with what is going to help my community, what is going to help the economy of my community, and I can do the rest. I don't need them to do nothing else. If they are going to affect the money flow, if I can benefit best off the money flow, then I'm going to support whatever that is that's happening. I don't necessarily vote per se. I feel that there's enough of us in this state that hold our direction as a community of what we select politically. We didn't have a problem in California in regards to presidential election. California didn't vote for this president. The populist vote didn't even vote for this president. So we need to focus on what is going to affect our day-to-day lives and living, and how our money works is going to affect us. How our investment works is going to affect us from now until we're not here. So real estate for veterans, your certificates are vital components, not just for yourselves, but just as a community at large. You don't have a stronger wealth base in the community than veterans. It's just that you guys are so caught up having to fight for everything, you can't even see how much you really have collectively. Because every one of you are all fighting the same thing. Every one of you, number one thing I hear you guys complain about is housing and the medical. That's a big thing for you guys. But receiving funds for homes is not a very difficult thing when you have 2 years of pay stubs. If you have active credit, it don't have to be good. You just have to be active. And the key about the certificate is, even if you don't have a job and you haven't been working, you can leverage that certificate with someone else next to you. How do you do that? You do that by putting yourself into a trust. When you're in a trust, if you have a corporate job, they may talk to you about trust. Or if you've been at a job, you may have a living trust already set up. Oftentimes, the certificate is not a part of your trust. And when you purchase a property with the certificate, you don't put the house in the trust. And you should. Because when you do that, that protects you, that protects your family, that protects the legacy of how you want to live something. And I think that is vital and key for all of you, is to have a legacy living program. You have to have a legacy living program. Any system that you're going to do or use should be about making residual income come back into your family. So if you want to invest in a piece of property, then great. I would suggest in thinking about how you want to invest in the property. Do you want to invest just sometime? Do you want to make it a side business? How do you want to structure yourself in regards to getting a house? Are you just trying to get a house just for yourself? Are you just trying to get something to help you? I want to make a business out of it. Because you can. You can actually use it as a business. You can actually use the information and say, okay, I'm going to execute these steps with these 3 brothers, and we're going to target a piece of property. We're going to target a 4-unit complex. And one of you stays there as the resident. Right? And everything else becomes a plus in your investment. But what you do with the certificates is you only do it to leverage. You're only using it to leverage. Let me see this piece of water right here. So, if I got this house, this one little certificate, this is my house. I get that house. You know what the lender is going to say when I want that building? What leverage do you have? Right? Oh, I got this house. He's going to say that's not enough. But I got another brother over here. This brother right here, an investor. He got a house. Y'all work together. Oh, this house right here is the house of leverage. All right, great. All right, cool. Well, can we do the deal? Sure you can. Because now they see you have some skin in the game. So when you make that purchase has to have residual income. You don't buy a building that's not going to produce anything. So in order to make this work, you have to know that what you're purchasing has the ability to produce the money to run itself on its own and not affect what you hold. You know what I mean? It can't drain from here. It can't put you in debt. It can't cause you to go into foreclosure. It can't do that. But the wonderful part about it is that the rates are only at 3.5%. That's a commercial property. So that means you would get a commercial deal on that property from the government. So that means you're not buying commercial property like normal people. You get a way better opportunity. So IRAs and Roths, those things work. Come on. Okay. SEP Simple 401k, those are the same things, right? The 401k program, those annuities, investing in stocks and bonds and mutuals. Those things matter. IRAs, Roths, IRAs, SEPs and simple 401ks, investment stocks. This is all tax-free growth. That's all tax-free growth. Where you charged on IRAs and 401ks is by your lenders or your institutions when you pull out too soon. Then they're going to penalize you for the money. So why take that money and give them that and they're going to charge you to use it? That doesn't make sense. You want to be able to take that money, put it to the side, and why not just go ahead and... Some of you that don't have houses yet and are still renting, you're in the best opportunity. You're in the best opportunity. You shouldn't just sit here and go, okay, well, I don't own nothing yet. I don't own anything yet. You want to make sure that you get engaged into owning. You want to know, what is your credit score? Credit check total, write this down. You can get that free. Just to know what's there. Credit check total. Bro, InvestorAnswer.com. InvestorAnswer.com. That's my company. So, like, if something else happens, you know, how do you secure your retirement if something happens? Your health fails, right? The job releases you. You secure your family through your investments, and those investments should be residual income. Real estate provides you with residual income. I came back from Japan homeless. Excuse my language, but I always tell people this. I went from homeless to hella homes in 6 months. 6 months I had 32 properties. By the end of the year, I had a tax problem. It's all of those properties. But that was my learning curve. I moved fast, but I learned, okay, this is great, but here's the responsibility. Wow, what do I do next time to avoid this? So I learned a lot. I didn't make mistakes. I ended up selling I sold all of the properties except for about 3 of them at the time to get from under the tax problem. But I learned, okay, now I don't structure like this. I do this like that. So I avoid these problems. That's where coming into LLCs and having limited liability companies helps you divert those tax liabilities and problems when you're buying more than just one little itty-bitty piece of real estate. So, your financial freedom, your legacy living, and your tax savings is in 3 tips. You create a legacy trust. That's number 1. You set up an LLC, as I was just discussing. And then you partner with veterans to leverage your housing certificates by investing in cash flowing residential and or commercial properties. You guys have the biggest network in the country. So just think about it. Y'all looking for houses. How many veterans are losing their houses? You guys could be the ones buying your houses straight from veterans. Buying the houses from them, letting them stay there, and rent it right back. if you structure yourself. And you're setting yourself up to purchase. That should be your goal. Set myself up to purchase. How do I take advantage of this responsibility? Because we could talk about all the community, whatever. My theory is that if all the veterans in the country turned into investors, the black veterans, we wouldn't have homelessness and problems. Because you guys get the best pricing on the money than anybody in the country. They make you jump through hula hoops. They try to play those games. But where we come in is we do all the hula hoop jumping for our investors. We do all the processing. We do all of the bank problems and negotiation. All we pretty much do with our investors is say, here are the houses. Which one are you moving on? You like this house? Great. We put you in contract to deal with the house. And here's the numbers of how they work out for you. The gentleman that was taking our picture is a broker. He walked out of here. By the time he got to the car, I sent him a deal. In his mind, how'd you do that fast? Because it's not just me. It's 7 of me. I have a team of 7 people, 7 families that I work for pretty much to make sure that we are all on board. Not only that, but one of the biggest lenders that has the best programs for veterans, I have a partnership with them. So if you guys have houses or looking for a house, you probably get called a lot of times by Quicken Loans and all these people blowing your phones up. That's because they have great programs for veterans. But it's who you access to get full compliance with your certificate, working and leveraging your certificate, because that's what it boils down to. Most real estate agents don't know how to set you up to be an investor. They just know how to set you up to buy a house. They don't teach you how much money you need to, how much percentage of the house is worth you buying. Why should I buy this house? You want to buy the house under market value. That's number 1. Number 2, you want to know how much work is it going to take me to fix this house. And when I put the money into that, how much money am I going to get that money back, and how much more money am I going to make on top of that after I close? So if I go into a house and I do a purchase, I'm doing the purchase. I'm going to go ahead and do the contract. I'm going to remove the realtor fees because I don't want the person that's selling me the house to have to deal with realtor fees. If they have a realtor and want to represent a realtor, then I bring my own broker to the table. I'm not an agent at all. I'm not a real estate broker, but I own a brokerage. And I work with other brokers. But I don't have a license, and I don't want one because I don't want to be limited to the stipulations by having a license. But for me, that allows me to even talk like how I'm speaking now. As a broker, I couldn't even tell you all this information. So for you, the key is setting up yourself, your individual self. What am I looking like on paper? Who am I considering myself to work with? Do they want the same things that I want? Do we want to go after this project together? Or do I want to do this all by myself? You have to be clear about those things. You got to know the upfront what you want to do, and you got to have an end game. You got to be clear about your end game. And in truth, you don't even have to buy the house. You could buy the paper. You could just wholesale the deal. That's it. When I first started, I was wholesaling houses. I get control of this house. This broker over here want to buy it. I already negotiated the deal with the homeowner, and now I'm in the middle, and they want this, and I'm like, okay, as long as you clearing $10,000 more than what I'm trying to get it off for, you can take it off me. And the broker is going to more than likely do that because my $10,000 that I'm asking to cash out is going to save him $30,000. Because if I throw it on the market, he's going to have to pay that $30,000. If you go ahead and grab it from me, he's just going to have to pay that $10,000. And then I'm out of the way. You guys can be doing the same thing. It's all about control and leverage, not owning, controlling. So when somebody, when I deal with Chinese investors a lot. I deal with, European investors a lot. They act like they don't own nothing.
Yeah.
They own absolutely nothing. And I didn't understand what I was learning. I grew up working at a golf course in Oakland, Alameda Golf Course, from 6 years old till I was 16. And I used to caddy, and I heard nothing but real estate business. My closest friend that lived out there, his dad was a broker. And every weekend he talked about commercial deals, buying buildings and leveraging companies. I didn't really, it was over my head, but there were seeds that being planted just listening to the information. So as time going on, it clicked. This is just Legos. You grabbing one piece of property to leverage it with this piece of property to buy bigger pieces of property. That's it. But the fact that you have certificates is almost like a government seal to a banker. That's guaranteed money to the bank. All you have to do is have the paperwork together up front so that way you can execute your directive. But you have to be clear about what you're going to do. If you're buying a piece of property that needs to be fixed, that means you need to have an inspection. That means that you need to have a contractor that's going to tell you, okay, here's the scope of work. It's going to cost you to do that. Right? Case in point, quick story. I had an investor. She wanted to buy a piece of, she was in foreclosure. She was like, oh, I'm going to buy this piece. I don't need to buy a piece of property. She had a ranch. She found a nice piece of property, but it needed work. Oh, I don't want to do that. I don't know. I forced her to say, get it. Trust me, get it. Like, you flip this property, you're going to be in love. But her visual, she wasn't a visual person. So she just seen problem. She didn't see the potential. She seen the houses in the neighborhood was nice, but she was looking at a wreck. The only wreck cost her about $25,000 to fix. She swiped a Home Depot card for materials and built the house in 90 days and walked away with $60,000 after owning. So after she got that, she's like, oh, I got this money. What do I do? Oh, yeah, this is great. I said, okay, well, you just got $60,000. How much is it going to cost you every year to live off of? What is your goal every year to live off? I need about $75,000. Okay, so you got a good head start. So you got half of that already. So take half of it. Put that half of that money towards this property. Leave that money into a compound account and let that account pay the note off. You don't have to look at that money because you're not playing for the game right now. You're playing this as a long-term game. This isn't a get in and get out quick. If you want to do that, that's fine. But the system is leveraged for you to, if you are true with your numbers, it's going to be true to you. That's just how this works. And most of us fall into gentrification because we don't take the information serious. We don't study the information. We don't get informed. We expect somebody to give us something. They ain't giving you nothing. That's not what this is about, the Give Me program. But if you sacrificed, then they consider giving you something. They'll commit to giving you something. You guys are the greatest sacrifice in the country. So they have to commit to giving y'all something. Regardless if they act funny, reluctant, hesitant, all of that is still a fact that is given to you. So you have to force their hand and what's yours. For us, we don't have that problem. I'm bounded and certified by the DOJ, certified by the Department of Justice, and the Secretary of State for American foreclosure, for houses that are in foreclosure, to keep the lenders decent and help those that are in foreclosure. But at the same time, those that are in foreclosure needs investors. Right?
Yeah.
Not just Joe Schmo, but hey, I want to keep the community black. If I'm in trouble and I see brother over here and he like, hey, I want to purchase, let me give him an opportunity to go ahead and get this house for me. What's happening is that agents and Hispanics are coming in with unified capital. We don't unify our money. We look at each other and talk about, oh, they ain't got, I ain't giving, and I ain't doing. That ain't how this works. The only way you gonna get is when you give. The only way the dream gonna work is when the team gonna work. Because teamwork don't happen without the dream. And the dream don't happen without the team. They go hand in hand. So if you're trying to accumulate group wealth, yeah, you can knock it down. Lenders will come in. I can have lenders come in right now. They see a group like this, they're gonna be talking about how much money can they give you. And you know why? 1, 2, 1 million, 2 million, 3 million, 4 million. It's $5 million right here in this room right now. 5 million, 500,000 per person that they're gonna give you for free. How do you go get that money? By making sure, what's your name, brother?
Mike
Mike what?
Porter.
Mike Porter?
Yeah.
That you don't walk up, hi, I'm Mike Porter, I need 5 million. What's your name, brother?
Richard
Richard what?
Stallings.
Okay. Stallings and Porter Association, how much money you want? Does that make sense?
Yeah.
Because they know that the leverage isn't on individual, but the leverage is on a corporation. And that the hidden power is on the bodies of the company. So the bodies of the company are strong, then it gives the perception of the corporation is strong.
Yeah.
Now you can use the corporation for whatever you want to and wreck your potential, or you can execute it and execute your wealth individually. And that becomes a memorandum of understanding amongst your partners. Clear. It's 4 of you. I want 25, 25, 25, 25. We're great. We all commit to that. 25 of the costs and expenses, 25 of the cash out. So if you putting in 100% of costs and expenses and the other 3 aren't, then when it closes, you get that 100% of your costs and expenses in, and your partners get their 25% out. That's just how that works. You can't be like, oh, I'm putting in more money, so I should get more money out to close. No, you're going to still need the person next to you, just that their presence is there. More of you creates more stability in the eyes of the lender. Commercial and or hard money. But a hard money lender, see if 4 people coming together collectively to do anything, why do you think the Hispanic community gets so many, how they get these houses so they just put their money together? No, they showing up in the group like, this is what I do, this is what I made the last 2 years, this is what I'm capable of producing, this is why I done hit this much, and we gonna come together and we're gonna do this. All right, great. Because they know it's more, the responsibility is on more than just one person. It's not one person carrying the load. So when you're talking about how to leverage that commercial certificate, it's always good to come in as an investor and go, the investors that have houses, you guys get together, oh, we want to buy this building. Guess what? They're going to say, all right, do you own any property? Yeah, I do. Okay, great. All right, awesome. What, do you have a property target? Yeah, we do. When you present that to them, they're not going to put no liens on your houses. They're just going to give you the money for the building. If you don't secure what you're supposed to do with the building, then they're going to start looking at your houses. But guess what? When you buy a house or building, individually, you should have your homes in a trust. I won't talk about how many properties I have control over, but I will say that all of them are under a trust. I don't even purchase a property under a me. It's under a trust. And I could name it whatever you want to. Biggest project I had was in Emeryville. I was given a property. I told Baba Dedan about this. I was given a property in Emeryville by Elder, and I was there trying to buy up a house he had on 55th and MLK, and it was burnt up. And I was trying to buy a burnt up house. And his son was there and was telling me about this property that his dad been holding for years behind Pixar. But let's go right now. I want to talk to him. The man looked at me and instantly told me I had the house. I was like, huh? He said, you don't even understand. I've been waiting for a face to look like mine asking me to buy it. Now, I didn't have all the money. I want it. I'm going to get it. He carried the portions that I didn't have. But when I went to go to zoning and I walked up there with my chocolate face, next day later I got a summons for suit by other white investors that already decided what they were going to do with that property. So in order for me to move forward, I had to fight them. It was legal game. What I didn't do is I didn't have the move secured under trust before I exposed what I was doing. And that left them to be biased against me. Now I'm going to say I've been fighting this problem for 3.5 years now. That's how long I've been in legal fight over this property. So I had to end up my attorney became a partner because I couldn't afford it. I wouldn't have been able to afford to fight after the first 3 months in legal fees. And that's what they knew, that you would fold legally because we would fight you. See, you guys wouldn't have that problem because you guys have attorneys in the Veterans Association. You guys have attorneys in the Veterans Association that deal in real estate. If you guys come together in any way, shape, form, or fashion as a body of investors, you get so much support in your network that you will be astonished. But you got to take the initiative. If you sit back talking about, what you can't happen, that's what's going to happen. If you keep telling yourself that, that's what you're going to manifest. That's just what I really firmly just believe. The power of manifestation is real. You know, and not only that, Legacy Trust is the best kept secret on Wall Street because that's where I learned it. I learned it at Bear Stearns. How are they doing this? What am I missing? So instead of me being mad and not going to those meetings that I didn't want to go at and sit around and listening to that ignorant rhetoric that I didn't want to really listen to and act friends, I had to in order to learn. And I learned. Oh, this is what you guys do? Yeah, let me show you. Oh, okay. And I started putting these pieces together. But it didn't really kick in until I wanted to really help others more. When I had to help somebody else rescuing them out of foreclosure, that's when all of the stuff for me really became active in regards to this is what you do. This is what you don't do. What's in it for you is cash flow benefits. So, new supplemental income, passive income stream without any fees, risk, or any daily involvement. The average veteran can make up to $6,000 cash flow in year one. Total operating expenses 0. That's just on one property. Each person is qualified for 4 houses. Did you know that?
Each veteran?
Each veteran. So you 4, that's 16 properties. Y'all believe that? Yeah. Y'all sitting on a hand that y'all don't even know. Y'all got a straight flush in your pocket, don't even know it. And they're not going to tell you. They don't want you to know. They specifically pick who they want to know. And you know it don't look like me and you. We don't have to argue with that fact, right? But we are going to argue the fact that those that look like us are the most not using what they have for whatever reason. And that's what I'm here to do, is get you out of that. Tax benefits. Depreciation to $10K per year estimate. Taxable income should be 0. Number 3 is you help another veteran in need. National reach to reduce veteran homelessness through various housing initiatives, giving back to support our altruistic housing endeavors to reduce foreclosure and homelessness. If you guys create a program that's effective, other veterans are going, what do you do? How do you go about doing this? you know? And truthfully, our sisters are the strongest financial pool that we have in the community. That's a fact. That is an absolute fact. Because statistically, they figure they're going to live longer and they're more responsible with finances. So they're going to give them money. They want to give them money more. They want to give them money really, really fast. So leveraging those partnerships, you can execute a whole mass of things that you weren't thinking about executing. You eliminate tax returns with C Corps, S Corp, partnerships, sole proprietorships. Form 10, 1120, 1120S, 1065, and 1040. These are the things that allow you to eliminate the tax responsibility or problem that you have. How you are structured. If you're walking around here structuring that I'm such and such, security number 577-11344, then your taxes, how are you going to be hit? It'll be more if you were a corporation. Because all of your expenses can be written off as losses if you have those. So when they go, okay, we can give you over here, but your business is not producing. Right? So it works at your advantage. And that portion isn't legal. And how the banks make money traditionally is that the interest rates in the bank changes on the loans. So the interest in the bank pays out to the depositors, and then the banks keep the difference. You can cut out the middle person. You get it? By taking the interest of the property, you cut out the bank. The bank will eat that if you don't go get it. So when people buy properties and they don't secure the property correctly, then they lose a lot of money in the purchase. Anytime you buy a house, you should make money. You should buy a house and pay the broker, and pay the agents, pay the title company, pay the appraisal, right? Pay the notary. You pay everybody but you. That's the height of stupidity. That is the absolute height of stupidity. I don't buy a house unless I'm making $10,000. It don't make no sense because the money is there. The money is right there. If you're buying a house that is, let's just say, medium a house right now in the Bay Area is about $500,000. Yeah. What's 3% of 500,000? Anybody know that? Huh? About 25,000, right?
Yeah.
That's how much the person that you buy the house from is paying the person that's selling the house. That's how much the person that's buying the house is paying the person that's representing the buyer of the house. Wow. Instead of them paying Joe Schmo to stand over your shoulder and go, okay, do this, do that, and the other, if you don't have the right, depending on the transaction, you don't have to have that person standing there. That's your money. But you do have to know how that works to secure that money. And that's what the knowledge goes in.
What forms do we look for when we get into this? What forms, like veterans form, like VA form? What do we use? Like I know for certificate is VA form 26/1880.
For the housing certificate.
Yes, housing.
Absolutely.
Okay.
That's the form that you want to.
Okay.
That is the actual form.
Okay.
Did you guys hear that? Okay, you guys already know that. Anyway. That form is the actual form that you have to have for your housing certificate. The administration already has those on records for you guys.
Okay.
When they run your social, who's who, and then they're going to check and see if you do have one, and they're going to see that you do.
Okay.
Oftentimes, they're going to do that. And that's the job of the lender. The lender is going to ask you, are you a veteran? And then they have to fill out all the information about you. And they fill out information about you, and then they go in and they pull you up, and then they say, okay, it's there, and then they'll move forward. But if they, for some reason they don't, it's good for you to know. It's good for you to have a certificate in your own possession.
Yeah.
Do some of you have a certificate in your own possession? Right. When you have the thing in your own possession, put it into your trust as property.
Gotcha.
So when you're not here, your kids are still using it. Because most of us is leaving here, and they taking the certificate with them. I just had a mentor of mine, her uncle, Uncle Henry, just passed this week. And then a godmom, I said, she was like, you had the big, nice send off with the veterans, and they came and I said, did he use the certificate? No. I was like, godmom, you've been knowing this all this time. Like, she's like, I never even think about it. Now I done sent her to over 60 houses that I've sold for her to go drop off the keys, do the showings for me. She's watching me do this. But she didn't think to use Uncle. She's his power of attorney. She was over his trust. And I'm like, the family just lost that by you not even saying, hey, these things need to happen. So she was just like, and that's horrible because I really, and then she's like talking to me about real estate all the time. I'm like, Auntie, you could have already, I said, it was a house. I said, the house that you like, you could have bought that house. She was like, oh my God. So we just have to take initiative of what's in front of us. That's just key. We already covered what legacy living is. It's pretty much setting up everything for you.
Yeah.
All right. Here's the process. You apply. You unlock the housing voucher. The money is secured. We find the deal for you. Acquire the property and then repair the property. You rent it to the family or you move in it. And then you benefit by your taxes. Because behind you purchasing, you being a veteran, and this being an investment for you, taxes is deferred. Y'all heard that?
Say it one more time.
Taxes is deferred. That's deferred. That means they ain't hitting you. That's what I'm saying. That's what gives you so much power and leverage. Me, I'm hiding behind an investor. Dad, Kenya, got you. Right? Because I don't have the benefits that you guys do. I'm limited. What do those numbers look like? A contract price for $365,000. Property address, say Pittsburgh. Marketing cost is $0. Acquisition fee is $0. Repair cost is $5,000. The value of the property is $375,000. It's going to cost you $5,600 to repair it. You see that?
Yeah.
All right. So the rent on the property is $2,300 a month. The loan amount is $350. The monthly mortgage payment is going to be $0 for the first couple of months. The closing costs, we pay those, you don't, ever. Monthly mortgage, they pay. Any all the monthly fees, you don't pay. Monthly cash flow income per month, $72. 0.25% a year the loan amount max. Insurance, utility, assumption costs, you pay. Property tax increase, insurance increase, etc., $0. Taxable income, $5,503. Depreciation, $9,000. Financial interest is $14,000. So VA clients' return on investment is $864 a month. Total tax benefits, $24,000 in only 12 months under this system. Under the system. Just by being a veteran. They don't tell you guys about that. Excuse me. All-in-one income solutions. You much higher interest rates. Benefits of lending to other veterans is you get, it's a much higher interest rate, to 18 to 15. Promissory note, tax insurance, you secure the deed of trust, and then your short-term note options, 3 months to 24 months. So, what that looks like is these 4 investors over here are doing great. You want to buy a property, but you don't have no money. They can loan you the money under these guidelines. So now the investors become a bank. This ain't illegal. I'm going to say this again. This is not illegal. You guys get together and choose what veteran you want to lend that money to. You write up a promissory note. You secure it with a deed of trust when they do the purchase, so that way the company is still on the purchase, but they secured the money for you. That's it. Now it's just that instead of you paying the bank, you paying other investors, other veterans, because they're structured to be able to receive the payment legally. Right? It ain't like it ain't like Mr. Such and Such and he's shooting you some money and y'all don't have no agreement. No, it's a straight up agreement. Private lending versus traditional lending. Reds is 2% the bank CD, 12% VA private money loan. 3 months, 120 for 2% bank CD. For you guys, 3 months, $1,123. 6 months, $2,200. 9 months, $3,300. These are the normal people. These are y'all, in regards of what you make. That's on a $30,000 investment. So if you just took $30,000 and you gave it to one brother, this is what you'd make in 9 months. You make $3,300 on that. In 6 months, $2,200. In 3 months, $1,100. So now your money is working for you. And that's the key about wealth, is that the money is always working. When you sleep, it's working. How do you profit? Monthly, quarterly, semi-annually, or one large payment. That's up to you and how you structure that with the person that's borrowing from your network. Okay. How much do you need to invest to spend to buy a property? Average closing costs are as low as $10K and can increase, decrease depending upon the profile of the situation. All right. So national average closing cost is $30,000 versus VA closing cost is $10,000. Every house that you go and close, your closing costs ain't more than $10,000. Here, for normal people, you're gonna spend $30,000 in closing costs. If I go to get a loan, my closing cost is gonna hit me for about $25, $30. If I'm getting a loan from VA, it's not going to cost me more than $10. And guess what? You could gift that $10 to them. Or they could gift that $10 to whoever. You don't even have to have that as closing costs. So now you just got 100% financing. And the $10,000 that you just got from them, you get a promissory note from them to pay them back. Now you're paying them $125 back every month on that $10,000 you got to close your house. That's leveraging them as a bank. Instead of going to a hard money person that's going to give you 50% on that $10,000, you can go to your people and say, listen, I need 8% on this. And I'm guaranteed to pay this back. And you attach them to the property so that their money is secured. Easy. Follow the terms of your agreement and you will have a good deal. And then knowing what the terms are. What should I ask him? How should I protect myself if this person doesn't pay me? And having that clear about what is and what isn't the priority. This is a testimony from a recent veteran that we had, okay? So I'm just going to read about Claudia Vaughn. Claudia Vaughn, Caucasian lady, investor, and she was really interested in real estate in the black. If you know anything a little bit about money, thank you so much for coming, man. That's okay, but thank you so much. Real estate in the black is about Whenever your money is in the black, that means that your money is growing. The term in the black means that you're making money. So real estate in the black is how to close out deals and transactions without being in the red. When you walk away from the deal, that you've retained an investment and that you're sustaining an investment through your purchase. That's what we are about. So prior to her working with us, she had no idea I could allocate my VA voucher and my 401k into real estate projects in this manner. To know that my profits are tax deferred was even more incredible. I had been losing thousands of dollars each year in the stock market, not to mention I was losing my home, my husband, and my mind. This is her quote. That said, it was very exciting to know I could invest in something that will protect my investment with a tangible asset such as real estate. After understanding how you acquire properties so far below market value, it became an absolute no-brainer. Thank you so much for teaching me how to effectively build my retirement one loan at a time. I can't wait for the next project and wish you all much success. That's her message to you guys. And she is trying to buy some every month. She is very, very aggressive. She always, when I talk to her, she says the best thing happened to her was her foreclosure. She lost a ranch, but now she's probably about 10 properties up. And just the fact that her tax liability dropped. Before it was high because she didn't know. So when I told her some things, she contacted her tax person, gave them the direction of where her investments was going, then her numbers reflected that reality. It is not illegal to structure yourself in such a way as to minimize your tax burden. Chief Justice John Marshall, U.S. Supreme Court, 1801 to 1835. That's his statement, and that's a fact. That's the game for you guys. It's to know how to do this. To structure yourself in such a way you minimize your tax burden. Best way for y'all to do that is to invest.
Yeah.
Other than that, you're gonna be pulling on hairs and cussing, wondering how I'm gonna have wealth after sacrificing so much. How am I gonna keep growing this beyond these little ass checks I'm getting every month? They ain't doing nothing smarter than us. It's just the information. They ain't smarter than us. It's just how we acquire the information, how we apply this information. And this is my legal disclaimer. I'm not Ansar Muhammad nor real estate in the black. It's not a CPA. I'm not an attorney. I'm not a tax planner, a custodian, or a tax preparer. All information given in this presentation is exclusively for educational purposes. Please consult with your CPA for specific instructions and guidance regarding your specific tax questions and concerns. This is not an offer to sell securities. Any person, entity, or organization must first be qualified by a company and read all of the offering documents and assess the reading and fully understanding of such documents. We are not licensed security dealers or brokers, and as much such, do not hold themselves to be. This presentation should be construed as information and not as an advertisement soliciting for any particular purpose. All securities herein discussed have not been registered or approved by any securities regulatory agency in accordance with the Securities Act of 1933 or any state securities laws. Okay? So in a nutshell, this is just saying I'm not a broker, I'm not a security, I can't tell you what to do. I'm not here as a company representing money, give you the money and I'll do this. I'm not saying that at all. I'm just giving you the information on how to structure yourself so that way homelessness won't be a problem and you not being an investor won't be one.